All right, good afternoon, everyone. Thanks for tuning in. Before I get started with this video of this week's market report or market update, just want to wish you and your family a happy Thanksgiving and a joyful holiday season coming up. As you know, next week's going to be a short week. The market is open Monday, Tuesday, Wednesday. It will be closed on Thursday and half day on Black Friday. So once again, happy Thanksgiving to each and every one of you here on YouTube and in our TRT community. So let's go ahead and jump right into it. Not a lot of big economic events this week. Pretty much the action was kind of up and down, a lot of chop throughout the entire week, and I'll show you the charts. But basically, the week ended up in just a nice little red doji across the indexes. But what drove some of the markets on the downside, if there was much of a downside, was the comments, right? We had a ton of Fed speakers, and we will have more Fed speakers next week as well. But some of the comments were along the lines that, hey, we must keep rates at peak. Bullard said that the rates could rise to 7%. There is a long way to go by Waller. Daly says pause is off the table. Not seeing evidence of underlying demand cooling. 75 BPS is still on the table, according to Mr. Collins at the Fed. So I do apologize that my voice sounds a little coarse today. I've been battling a tough cold the entire week. So anyway, that's what they're saying here, and that's just kind of spooking the markets a little bit. But overall, I'm going to just go ahead and jump into it. The market just wasn't really responding, at least to the downside, with all those comments. But it was just more of, okay, where's the support? Where's the demand? And you just kind of have to watch the resistance and support levels. And pretty much all week, it's held pretty well. So once again, we have a doji type of week, little indecision all over the place. As we head into next week, traditionally, from what I've seen, is that you usually on Thanksgiving weeks, it usually ends up red. So we'll have to see how that transpires this coming week. I do remember that last Thanksgiving week, we did close red. All right, so we'll see what happens this coming next week. But let's go ahead and jump into the economic calendar. There's not a lot of data on Monday, Tuesday, but I do have to warn you, on Wednesday there is a ton of data because it is a short week. They're all dropping the data right on Wednesday. All right, so the first thing on Wednesday morning, if you want to wake up, is continuing jobless claims is going to come out. We have initial jobless claims at the same week, jobless claims 4-week average. All right, we have manufacturing PMI shortly after, about 9:45 in the morning for Wednesday. And then you also have services PMI, okay? And then right after that, at 10 p.m. or 10 a.m. 10 a.m. Eastern time, you have Michigan consumer sentiment, inflation expectations, etc. Right there, right then, you have new home sales. Now, today we had existing home sales. Now we have new home sales. Now, as you saw, part of the reason why markets moved down was that new home sales or existing home sales came in hotter than expected. It's down, but it's hotter than the forecast. All right. So next week we have new home sales at 570K forecast. And then later on that day, I know that there's going to be some Fed speaking. Also, this might be a big one for Wednesday, is the FOMC meeting minutes. Okay, so usually when the minutes release at 2 p.m., you're going to see some volatility in the market. So be aware. Probably don't want to hold anything Tuesday night going into Wednesday because there's just a lot of data that the market has to sift through on Wednesday morning. So let's go and jump into it. Here's the cues. This spot, right? It's very familiar to us, isn't it? Okay, we've been hanging around this area for quite some time. In fact, since September, for 2 months, we've been around this area for the Qs. You can see back in September, we hit this support line here. We failed, okay, and then in October we retest, failed, okay. Since October 13th, we tested this area, this 280 area, failed, retest, okay. So a lot of chop, right, up and down, and finally completely got rejected, and we broke through. All right, November 11th, last week, last Friday on Veterans Day, right? We broke through only to come back to test, and today it actually came into the zone and still held. Okay, so now on a daily, you have kind of a red hammer. All right. What's not impressive is the fact that we're still down on volume, right? You look at this declining volume throughout the week. And of course, a lot of that could be to do with, people are traveling, people are starting to travel for and packing up the suitcase for the Thanksgiving week. But here, the stochastics is definitely pointing downwards, okay, at least on the daily chart here. And you're not seeing a ton of action and a ton of volume coming in. All right. So, as far as the daily chart goes, yes, it's bullish if it can hold the 280 level. All right. If we break down the 280 level, you see yesterday during the pre-market when data was releasing, we hit 280 perfectly on the mark, and the market moved up from that support line. All right. And today we actually hit about 282, which was one of yesterday's low. So here we are. We're back in this chop zone. Okay. If the markets do hang on to that 280 level, then you can see a potential retest, all right, of next week, potential retest of 293. Okay. So I'm going to leave that target there for next week. But I'm going to say if we lose this 270, 280 mark going into Monday, Tuesday, I think we're going to come down and test the moving average 20, which is right about the 277. And if that breaks, let's look out, folks. You got a gap below here at the 273. So my downside target remains at 278. But if that breaks, I do think that we're going to see potentially this come down to fill the gap. So that's just the way that's what I'm looking at so far here on the daily chart. If we head over to the weekly chart, and you got to see this, and this is where it gets interesting, right? We have a red doji on the week. Okay. Typically on the top of a run, and you start seeing a doji, that usually signals a bearish trend or a bearish trend reversal. We've seen this shooting star here back on the week of August 15th. We've seen this kind of pattern back on March 28th. And the top of the market was back on December 27th. Actually, at the top of the market for the Qs was actually Thanksgiving week. All right, November 22nd. So that was the top of the market, and that's when the bear market really started. So with that being said, with the way that candlestick looks, it's not necessarily a bullish sign. All right, especially on the weekly chart. If I head over to SPY, okay, real quick. SPY has similar patterns, right? You've got a red doji here, shooting star here, top of the pattern here, top of the pattern here as well. Okay. Still relatively, the volume on SPY is a little bit better than the Qs. However, if you look at the stochastics, at least on the weekly, this is starting to trend downwards. All right. What did hold for the SPY this week was the SMA 20. All right. The SMA 20 held like a charm at 390. All right. So let's go over to the daily chart here. All right. Same thing with the Qs, right? We've been in this familiar area before. Back in August, we retested the zone, bounced, okay, and then finally got rejected heading down. Right here, we actually broke through this week, but only to come back down and retest that 390 mark and then bounce as well. Not very encouraging, okay? You have a little bit more selling volume on the SPY for at least for today. And of course, one of my better indicators that I use is the stochastics. Okay. The stochastics is pointing towards more downside to go. So I'm going to put a target here next week of 385 for the SPYs. Okay. But if we can hold this area, all right, you can see a retest the 403, 404 mark from Monday this week. If that breaks, then I do think that eventually it's become a little bit of a magnet, right? Trying to test the week daily 200 moving average. Now, last week the daily moving average was actually 407. That was my target. We did not hit that. We actually hit 403. All right, pretty close, but not quite. But this moving average is starting to slope down. Okay, so with that being said, I'm going to put a target there of 405 for the SPYs going into next week. Something that's interesting that I should point out here is the Tesla weekly chart. All right. Tesla actually is closing right at the support zone. All right. And it's starting to look even more bearish. Okay. Once this level, and this is part of the reason why, one of the reasons why I suppose is that the market is not responding very well. All right. At least Tesla investors are not responding well to the fiasco with Twitter. All right. He's online, firing people online, talking all this stuff all this nonsense. And investors just aren't sure how he's gonna continue to grow Tesla if he splits up his time with Twitter. So here we go. I mean, we close at 180, all right, and we visited the lows from the previous week as well. All right. So once this starts breaking down, watch out. I'm going to put target here of 162, which is your moving average on the moving average 200 on the weekly. Okay. All right. Let's go into something other than Tesla, and that's Meta. Okay. If that's not a short signal, then what is, right? I mean, you have on a weekly, you have a declining volume. All right. And the price action is moving upside here. All right. And you have a shooting star on the daily here. I'm sorry, on the weekly. And that's not looking terribly good for Meta. Nice pump and everything, but not buying it. I'm going to put a target of 106.94 going into next week. I do think it's going to come back down and visit this SMA 20. If that does not hold, you got some gaps down here to fill. All right. So Meta, I'm going to put a 106.94 downward sloping SMA 20. Not looking too constructive for Meta. So let's go to Apple, because this is what's really holding up the market. So all week long, Apple's been just holding this 150 area. All right. So we hit about 153 on Monday, right? Or Tuesday. All right. We saw how the markets bounced. All right. And on Thursday, nice rip. Okay. And on Friday here, now we got a hammer. All right. Now we got a hammer. So if Apple continues to hold its price levels, you're going to continue to see the SPYs and the Qs move up. Okay. But that red hammer there isn't really encouraging, quite frankly. And you have lower volumes as well. So watch out for this area 150 to be tested once again this coming week. And if that doesn't hold, all right, it's got to come. It's going to come down. Probably hit a 147 area. All right. So that's kind of your update for the week. Now I'm going to go into the kind of this, excuse me, some of the micro time frames. And if you're part of TRT, this is what I've been preaching all week long, is that you got to know your support and resistance levels. So we trade on the 5-minute chart, and then we look at the trends on the 30-minute chart. Okay. Beginning of the week, all right, we were in this area, and then it pumped, right? It would pumped on PPI data, all right, soft PPI, but completely got rejected at the 294 level. Came back, tested this support line here, and then broke down finally on, I believe, Wednesday. On Wednesday, we had a down day, but then it actually started moving up. And then, of course, today, Friday, this was Thursday, by the way. Of course, Thursday, we actually broke that, right, down to 281, okay? Down at 281, that's your support level, all right? Why is that your support level? Because look back here, back on November 11th, that was support. So the markets bounced perfectly at that 381 level, contested with the 285 level for quite some time here throughout the day, right? Rejected, came back, okay? And then today, pre-market, the markets rallied in the futures, right? The futures rallied only to be dampened by the existing home sales. Once that existing home sales came in, we hit a 282 support, which pretty much was support from Thursday, and they try to hit that 285 once again this afternoon. So what happens when support breaks? It generally becomes resistance unless the bulls continue to move the price up. So this is the level that you got to watch next week. If the 285 does not hold, then you're going to see that the Qs may start to test at 281 once again, okay? But if it can break through at 285, you get that sense that, okay, it's going to retest at 288 mark, which was the high of today. So when you're trading, whether you trade SPYs or Qs, same thing, or even Apple, all you got to do is take out your 30-minute chart and start plotting the levels. Where are your supports and resistance? If you look at SPY has that support right at the 390 level, right? Psychological support. 280 is a psychological support, and bounced, right? And then we hit that we hit like almost 399 in the pre-market, only to get rejected once again. All right. Yesterday's low became today's support. Okay. Yesterday's support, this becomes support. Okay. And then we started to move up towards the end of the day, but not quite of a strong move quite just yet, because you still have a lot of resistance areas up here. So, from a smaller time frame or 30-minute time frame, watch out to see if the 394 area holds on Monday. If that doesn't hold, then you're going to see the 393 area retested. Okay. But if this area starts to hold, then you can see a potential move up. All right. So that's it for this week. I hope you guys had a great week. And, again, next week is a 3-day week. All right. For the market, you do have a half day on Friday. It's going to be a really big day on Wednesday with all this data releasing all at the same time, pretty much the same morning. All right. With that being said, I'll see you guys next